Hello, everyone, and welcome to Cultivating Success's Small Farm webinar series. Today, we're excited to have a webinar on Quicken versus QuickBooks, Record Keeping 101. Cultivating Success is a partnership of University of Idaho Extension, the Small Acreage Farming nonprofit Rural Roots, and Washington State University's Food Systems Program. This program was established in 2000, and we're really happy to be celebrating our 20th year. Today, our presenter is Ashlee Westerhold. She's located in Twin Falls, Idaho, and is an Extension Area Economist. I'm Colette D. Phelps. I will be your facilitator today. I'm with Northern District Extension, located in Moscow, Idaho. Just a few webinar tips. It could be helpful to you to close all of the other programs running on your computer, especially if you experience any challenges with the speed of the slides or your sound. If you have continual sound problems, you can always call in on the telephone number provided in your welcome email, and then please mute your computer sound so you don't get feedback when using the phone. At any time during the presentation, you can type questions in for Ashlee into the Q&A box in the control bar at the bottom of your screen. And I will say that sometimes, depending on your screen setup, you might see that on another side of your screen. It is generally at the bottom. So go ahead and type questions in at any time. I'll be moderating the question and answers, and if there's something related to a particular slide, I'll jump in and ask Ashlee the question. Otherwise, I may hold the question until later in the presentation. I emailed everyone a copy of the slide handout this morning, so you don't need to take notes of the slide content, maybe other things that come up in the discussion. We will have a recording of this webinar and the slide handout available from the Cultivating Success website. At the end of the webinar, I will show you where to find that. With that, I'm going to go ahead and stop sharing my screen and let Ashlee share hers. Ashlee, thanks for joining us today.
Thank you, Colette. So I'm just going to go ahead and, hopefully move through. We were doing so well. Okay, there we go. So, good morning, everyone. Again, my name's Ashlee Westerhold, and today I will be talking about record keeping. So, record keeping definitions. Let's start out with the basics. So, what is a record? A record is a thing constituting a piece of evidence about the past, especially an account of an act or occurrence kept in writing or some other permanent form. And so when we talk about record keeping, it's the orderly and disciplined practice of storing business records. So I know all of you got into farming or got into agriculture because you love records and you love keeping records and you love being your own accountant at home. I'm just kidding. I know a lot of you didn't get into that, didn't get into what you're doing for that, but it still is a huge part of what you guys do, and so that's why we're talking about it today. So why keep records? Why does it matter? Well, you have to for income tax reporting requirements. You need to assist in planning and management, such as obtaining credit, participating in government programs, and deciding what to produce. You guys are in a business where every day you have to make decisions. Well, if you keep records, you can make that decision easier. So without record keeping, the chances of managing a successful business are poor. It's really unlikely that you are able to go through your business life cycle without keeping any records. I would say the people that are most successful are the ones keeping the most records and are very up to date in their financial position and knowing where their money is going. So again, you can't really know where you're going until you know where you have been. And I think this is really a really great quote that really pertains to the industry. And it says, it really means, how can you make decisions for the future if you don't know where you are right now? So I really think that That's the biggest reason for record keeping. Again, it's easier to make decisions when you know what your financial position is. So, how can record keeping help you? Well, record keeping assists in preparing financial statements quickly and accurately. I'm not able to see all your faces, but I think that a lot of us try to avoid financial statements. And I think that it is one of the most important things that you can do for your business is prepare those financial statements at least yearly. And we want them to be accurate. And I know your bank wants that too if you're working with a banker, and I know your accountant really likes that as well. So it provides you information to enable the control of the cash in the business. Cash is king. If you have cash on hand, you're able to make decisions and take opportunities where those who do not have cash readily available are not. And I think that's really interesting, and a really good part about record keeping is knowing where your cash is. So it provides management information to base business decisions off of. And I think, again, you need to know your financial position and your records to make business decisions. So record keeping also contributes promptly to assessing the financial situation of the business at any time. If you are doing your records and keeping track of them in a timely basis, then you are able to know your financial position at any time. And I think that is really important. Again, in the agricultural climate of today and being in small farms, it is really important that you understand your financial situation. If you're trying to get a bank loan, if you are trying to expand or start a new enterprise, it's really important to keep records for that reason. So record keeping can save you a lot of time and effort. If you do not do record keeping by yourself, but maybe take a shoebox of receipts into the accountant, that is a lot of time for the accountant and usually a lot of money. And if you're your own accountant, then you need to find all those receipts and implement and input them in yourself, which can take a lot of time. So record keeping also measures the business performance against projections. I'm going to talk about cash flow a little bit, but I know that we have Farm Financial Fitness with Dr. Kate Painter, and she will be talking about that in the next series of webinars. But you really need to know if your cash flow is accurate and if you were making those projections as accurate as you could. And so if you have records and are record keeping, then you are able to measure how you were at forecasting. So record keeping also highlights areas where problems could arise, and it enables solutions. It provides valuable information for bankers. Again, I can't stress that enough. Bankers really like when you keep good financial records and when you are actually updating those records and keeping your own records. And so I think it is really important that you are doing very good record keeping. So as I said, record keeping helps you plan. If you know the cycle within the business, if you know when you're going to be selling calves for income during one month and maybe buying feed in a different month, you need to be able to save some of that cash from your calf sale to buy that feed. And that way you are understanding what the cycle of the business is. Some months cash flow is going to be very small, and some months you're going to have a lot more cash coming in. And it's knowing when you're going to have to pay a loan payment, or maybe when you do have to buy feed, that you understand where that cash can come from in the other cycles of the business. So again, record keeping can help you anticipate the inflows and outflows of money or cash. And so one of the benefits that record keeping also helps you comply with the law. So if you have records that are contracts, leases, or other agreements, you need to maintain the original copies of all legally executed contracts. Do it to protect yourself. Then we have licenses, insurance, permits, especially if you are selling to farmers markets. It's very important that you have the permits ready, available on hand. So proof of insurance, pesticide applicator license, but also the license and permits that are needed for, say, Boise Farmers Market. Also, it is way easier to do payroll and personnel if you're keeping those records in a tidy way, so that you can keep track of total hours worked, the wages that are paid, and employment records so that you are complying with the law. So record keeping also helps you with taxes. So the Schedule F, I know a lot of us know what that is, but we have to enter receipts, expenses, and production in the appropriate records. So in the Schedule F, how do you come up with those numbers if you didn't have any records? How would you show all of those expenses that you incurred over the year? So also, records help you with state and federal income tax sheets. They help you with property taxes. But I added a link in here, which all of you should have in the handout. And it's, if you will be filing taxes by yourself, you can use this resource, www.ruraltax.org. And it is very easy to use. And I would hope it would help you if you are filing taxes by yourself and not using an accountant. So what we are talking about today, and the title of the presentation, is Quicken versus QuickBooks. And so I wanted to tell you about 4 record keeping systems. So there's Quicken, QuickBooks, Excel, and Google Sheets. And so first I wanted to talk about Excel and Google Sheets because they are used, and I'll talk about that in the next slide. So Excel and Google Sheets, they have a lot of positives. So they're spreadsheet-based programs. They're relatively low cost. Google is free to set up, so Google Sheets are free. However, I'll get into the negatives on the next slide, but it is relatively low cost. They can keep an organized list of accounts, and they can enter and categorize transactions. They can generate income statements from your transactions you've entered. They can track invoices you've sent clients and cross-check them with transactions you've entered. However, they are so time-consuming. You have to manually enter all of those numbers. They cannot connect to your business bank accounts or credit cards and automatically import or sort transactions. They cannot automatically generate typical financial documents based on the data from your books. They cannot detect or notify you of data entry errors. So we are all human. We all make mistakes, but why would we make it harder for ourselves? So I want to think back to a story of when I was in my master's, and I'm entering into a SAS program, which is a statistics software. And it's really big on semicolons. And if you don't have a semicolon in a long 5-page data code, it will not run and it will not be accurate. Well, if you are implementing all of your receipts and all of your transactions into Excel, the likelihood of you making a human mistake is very high. And so not being able to know that there's a mistake being made could be detrimental to your finances or understanding of your financial position. So I just want to tell you that. But it's a good way to start. Again, it is semi-free or low cost. It does not easily allow multiple users to work within your system. So sure, you can share the Google Sheet with a business partner. However, it's really hard to know what your business partner entered, and it's just not that easily traced. So I do think that Excel and Google are a great place to start record keeping. However, I do not think they're the best things out there for record keeping. So again, today's topic is Quicken versus QuickBooks. And so this is what you guys came here for, and I will dive into this. I wanted to say that there is a great reading that I got most of this information from, and it's from Oklahoma State, and they do dive into Quicken versus QuickBooks. And I think that if you want supplemental reading onto this topic, it will be in my references at the end. So I know that there's a lot of writing in my PowerPoint, and I know there's not a lot of pictures, so hopefully my voice can carry this presentation to not be boring. However, I think that finances are boring in itself, even though I'm an economist and work with numbers all the time. I'm trying to make this a little more interactive. So what are the differences between Quicken and QuickBooks and their features? And so Quicken is a cash accounting system. So just farmers are the only ones, farmers and ranchers, that are allowed to use cash accounting. Where QuickBooks is accrual accounting, but you can create cash basis reports. Quicken is used for personal finance. QuickBooks are used for small business finance. So QuickBooks is the staple small business administration type of software. Quicken is record family living expenses off farm income. And in QuickBooks, you'd have to manually add the farm or the family living expenses and off farm income. So you can convert Quicken files, however, into QuickBooks, which could be easy for you who might have both systems. In Quicken, you can track your investments, where in QuickBooks you cannot. In Quicken, there are financial calculators. So if you have a loan, savings account, retirement, if you are thinking of refinancing or saving for your children's college, Quicken has the financial calculators to do that. Quicken also has budget features, which would be very useful, especially for enterprise accounting. And then QuickBooks also has budget features. However, they are a little more limited than Quicken. So Quicken versus QuickBooks features continued. So in Quicken, you are able to track your loans and amortization the same in QuickBooks. In Quicken, you are able to download electronic credit card, bank information, credit card procession service, and you are able to do the same in QuickBooks. In Quicken, your passwords, you have file or transactions, whereas QuickBooks, you have multi-level passwords. So there is some more protection. The payroll for Quicken is to create accounts, calculate, and enter manually. In QuickBooks, you do pay extra, but you can get payroll subscription service, and it can enable manual entry. So I work in the Magic Valley, as Colette talked about, and a lot of our dairymen really use and rely on QuickBooks, and mostly it's for the payroll. And I will say that is a big difference between the two. And so if you are trying to pick between Quicken and QuickBooks and do have a larger operation or have a lot of people on the payroll, I would say QuickBooks is used more for the payroll aspect. QuickBooks has integrated invoicing, accounts payable, and receivable. Again, it's an accrual accounting system. And so the accounts payable and receivable are on the accrual system. So it also can keep track of employee records for you. Again, another reason that I think a lot of our larger employers in the Magic Valley that are in ag use QuickBooks over Quicken. So how are they when it comes to data entry? I know a lot of us don't like to spend a lot of time on the computer, especially after a long day of work. Maybe you were out all day And the last thing you want to do is enter all the receipts and enter this data. And it's so hard to get producers or growers into the office and actually have them enter the financial aspects or enter data. Well, in Quicken, you enter transactions into a register, where in QuickBooks, you enter transactions into forms, where you say an invoice window, etc. In Quicken, you can write checks for your personal checkbook. And then in QuickBooks, it's write checks. It can be a business check with a voucher area. In Quicken, you can enter payments. In QuickBooks, you can enter bills, pay bills, and assign check numbers. In Quicken, you can enter a deposit, but in QuickBooks, you can have estimates, create invoices, receive payments, create receipts, enter sales receipts. So I think that there's a lot of benefits to both programs. I would say both programs are a huge step up from Excel and Google spreadsheets. But I think that both have their pros and cons. So when we think about these two programs, how are they when it comes to farm management or agricultural producers? So when we think of Quicken, we can import a farm category list created elsewhere that includes feed, fuel, fertilizer, and it minimizes the effort required to develop a beginning chart of accounts. And so in Quicken, we're able to create those category lists outside and import it into the Quicken software. In QuickBooks, we have to indicate that we're going to be using QuickBooks for an agricultural business. And then we have to establish a chart of accounts. And the chart of accounts will link to the basic Schedule F. So in both, labels in the category list and chart of accounts, respectively, can be edited, added, or deleted, allowing some customization to match the individual business needs. And so we actually are implementing programs around Idaho that is based off K-State's curriculum of QuickBooks for farmers. And I think some of this will be addressed in those classes, but we have a chart of accounts linked with that we're able to bring in for our QuickBooks users. And so if you are a QuickBooks user already, please reach out to us and I can probably send you that chart of accounts if you're interested. So we have Quicken versus QuickBooks when it comes to balance sheets. So again, we're going to be going through financial fitness on these Cultivating Success webinars over the next several weeks with Dr. Kate Painter. And I think that she'll go through these a lot more, but what are the differences between Quicken and QuickBooks when it comes to balance sheets? So Quicken, the accounts for individual assets or group of assets would need to be created to create the balance sheets. In QuickBooks, it has the advantage of a fixed asset system in which purchase date, account, and cost can be recorded, which facilitates asset inventory and records with depreciation. And again, I'm not here to talk about balance sheets in depth. I'm here to compare both programs, but please tune in for next week's webinar series when we do talk about balance sheets in depth. So Quicken and QuickBooks when it comes to income statements. So income statements is also your net worth or your Schedule F. So you guys might be familiar with Schedule F. And again, we'll be talking about this over the next several weeks. But in Quicken, you can create a profit and loss statement given its cash accounting nature. Again, Quicken is a cash accounting system. This label is less than accurate and the report is genuinely indistinguishable from a cash flow report. So the hard part in what it is saying is that the income statement looks a lot like the cash flow. And so if the user in QuickBooks, if the user has developed a complete chart of accounts, including depreciation and asset inventories, plus has made all the necessary journal entries and adjustments, then it is very simple for people to get an income statement out of QuickBooks. So Quicken and QuickBooks cash flow. Well, in Quicken, cash flow reports are a standard report. Again, that's why the income statement looks a lot like the cash flow in Quicken, is because Quicken is always working on that cash flow, and it is one of the standard reports. Where QuickBooks, one of their standard reports is that profit and loss statement, and so we would have to make it repurposed and customized to serve as a cash flow, making it more complicated than Quicken. But in both programs, loans can be amortized with scheduled payments retained for future use. So you know when those loan payments are coming out and how that affects your financial position. So as agricultural producers, as growers, you usually have more than one enterprise on your operation. So when we think about enterprises, if you are losing a lot of money in one of your enterprises, don't you want to know? I would say a lot of our producers do. You could be implementing a rotation. So I know in southern Idaho, some of us have wheat, which is very low when it comes to prices, and it is not the biggest money maker. But we have it in our rotations with, say, one of our larger and more profitable crops like sugar beets or potatoes. But we understand that, and that falls into our goals and aligns with our goals. But if you are having an enterprise and you're wondering where you're losing your money to, then it is great to be able to categorize things by enterprise. So if you are using a lot of pesticides in one of your enterprises and you aren't sure if you want to keep it, then you need to know what your profitability is per enterprise or what your expenses are. So in Quicken, they use what's called the tag feature to say which category the expense or receipt should go into. And you can identify these transactions by enterprise, by partnership share, or by farm. In QuickBooks, use the class feature can be turned on to allow income and expenses to be associated with our particular project or production activity. So in both Quicken and QuickBooks, labels in the category list and chart of accounts respectively can be edited, added, or deleted, allowing customization to match the individual business needs. And so you just have to customize it to be able to do it. And I think that enterprise accounting is very, very important. I know Kate will be talking about this, but I just want to hit home that enterprise accounting is very, very, very important. So budgets. What can Quicken versus QuickBooks do with budgeting? Well, Quicken offers more features for modifying a budget as zero budget amounts that can be excluded, but you can apply average amounts or preserve monthly or quarterly detail. And QuickBooks allows budgets to be developed for classes and projects from historic data. So I think all of us, hopefully, are creating these enterprise budgets. And so when you're talking about an enterprise analysis, well, maybe we can make budgets to actually reflect what we're thinking we're going to spend from our historical data. So in both programs, they include a standard comparison report that highlight budget versus actual figures. So did you line up with what you budgeted? And I think that's very important for us. And if you didn't budget the correct amount, or if it seemed way off, why did that happen? And I think that over time, you're able to see your history, and that can show you where your strengths and how you've changed over time, which can be a very powerful tool when talking about financial positions. So Quicken and QuickBooks both generate reports, but what are the reports that are mostly used? So in Quicken offers a variety of reports and graphs focused on banking, investing, spending, comparison, net worth, balances, and taxes. In QuickBooks, it includes more than 100 default reports under group headings: company and financials, customers and receivables, sales, jobs, time, mileage, vendors and payables, employees and payroll, banking, accountant, taxes, and budgets. And so when it comes to reports, QuickBooks has ample amount of reports that they're able to generate. But it's just knowing if you need all those reports, if you need the vast amount, then QuickBooks might be better in that situation. So I think all of us, after this discussion, really care about these accounting systems and what they cost. I know that some producers that are starting out are very worried about the costs associated with these record-keeping softwares or software. And so when we think of Quicken versus QuickBooks, Quicken can range from about $35 to $90, whereas QuickBooks, if you get Desktop Pro, I just bought it. It was $179.99 at Office Depot, and it can range depending on adding payroll. But the Desktop Pro version, they say, needs updated every almost 3 to 5 years. And so both of these programs are updated yearly, and it's really up to you how you want to update them for future use. I wouldn't say that you need to buy each new version every year, but it would be interesting, or not interesting, but it would be beneficial to update 3 to 5 years. So after this talk, you're probably thinking, well, what software should I use? And for everything in an economist's life, we are always supposed to answer, it depends, because it really does. It depends. What are your wants and needs? What are your goals? Based on the information I have given you, maybe you see something that aligns more with your business goals than someone else. And so I also want to urge you, when you're discussing the differences between Quicken and QuickBooks, check with your accountant. And so another reason that I've geared towards QuickBooks in Southern Idaho is because the accountants and bankers really like QuickBooks files when it's given to them, where others might accept Quicken, but I would urge you to check with your accountant or to check with your banker to see which accounting software they prefer. And I know this could be a huge part of which one you pick. And so I just wanted to say that again before leaving you guys today, because Quicken is so user-friendly. It is very easy to pick up, way easier than QuickBooks. However, QuickBooks is the one that is used the most, and with the payroll especially, it has some benefits that Quicken is not able to provide. So I wanted to leave you again with the publication that I base a lot of the information off of, is the Quicken or QuickBooks, What's the Best Choice for Agricultural Producers at Oklahoma State. And so I wanted to say, if you download Quicken or if you buy Quicken or QuickBooks, there are manuals out there, and the ones that I've referenced is the manual for Quicken, which is out of Oklahoma State, and then there's the Farmer's Guide to QuickBooks, which is out of Kansas State. So both of them have downloadable chart of accounts for QuickBooks, and they have great manuals that show you step-by-step pictures, and I say they have done an amazing job. And if you had any questions, they have great resource pages as well. And so if you're interested, I would look at both of those programs, and they've just done an amazing job. So with that, I will entertain any questions from our participants.
Great. Thank you, Ashlee. One question, what are the advantages and disadvantages of cash versus accrual accounting for a farmer ranch?
Great question. And so we get this all the time. So why should I have cash or accrual accounting? Well, again, being the economist, it depends. However, so cash, you only count transactions when you give cash or take cash. And so if you have a bill at the co-op and you have an accounts payable, then you wouldn't count that in cash accounting. But you are still technically out that money. Just because you bought something on credit doesn't mean that you have that extra cash. So cash accounting is not the best when you are having places where there's credit. Also, if you are a producer that has a CSA or has given out product and you are waiting to receive payment, then you have already had a transaction, but in cash accounting, that is not captured. So in accrual, you're able to say your inventory has changed and you have an accounts receivable, which means you have money that you are going to receive, but haven't had the cash yet. And so it is a more accurate system. As a farmer or rancher, I recommend, in my personal opinion, you should have both cash accounting and accrual and understand your cost basis, which QuickBooks allows you to have the cost basis associated with it. But understanding your inventory is very important, especially if you have a lot on hand.
And it sounds like working with your accountant would be important, and there might be some tax implications with how you do that accounting.
Right. And so I think that it's really important to talk with an accountant, have an accountant. I would say the accountants usually know your business better than you know your business in some cases. So it's always great to have a really trustworthy professional that you're working with, and they're able to answer a lot of these questions. But yeah.
Great. Well, thank you for that presentation. We don't have any other questions that have come in. So
Okay.
you must be absolutely clear. That was really a great comparison. And I know that it leaves people with some decisions to make and some more research, but it's great to have that quick overview.
So
If you
I'm
wouldn't,
going to stop share and let you finish the webinar.
okay, great. Okay, everyone. So I just wanted to remind you all that you can find the recording for today's webinar and the handouts here through the Cultivating Success program. You can also come to this Small Farm and Ranch webinar series tab, and that's where you're going to be able to link in and register for our upcoming webinars. So as Ashlee mentioned, next week we're going to have a webinar that's going to be part of the Financial Fitness for Farmers 4-part series, and it's going to focus on balance sheets. And then the following weeks, we're going to have a focus on income statements, then enterprise budgets, and then cash flow statements. So one of the unique things about these upcoming 4 webinars is that they're going to be structured as like a short course, and this short course is going to have a web page with additional resources and exercises you can do so that you can become very familiar with each one of these key financial statements. So we really encourage you to sign up for those and to participate, and we'll link you into those actual practical applications of what you're learning. We also have 2 other webinars this month. On Monday, March 9th, we have this webinar on fresh produce and pathogenic microbiology. If you are a produce producer, that could be pretty interesting to you in terms of farm safety. And then if you are really interested in beneficial insect habitat, on Monday, March 16th, we have a webinar on assessing the beneficial insect habitat on your farm. Here is the link, which is in your handouts, where you can directly go to register for these different webinars. If you do register for the financial fitness webinars, we will provide you with a link to those that website page that is going to have additional support materials. We do appreciate your feedback. We hope that you will just take a quick couple of minutes to complete our webinar evaluation. You will find that at this link, which will automatically launch in your browser when I end today's webinar. So Ashlee, thank you so much for your presentation. Those that have participated today, thank you. We hope that we see you in March for the Financial Fitness series and our other webinars. With that, thank you and have a really great day.
Thank you.